Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Yesterday, silver was sitting at around $18.80 to 90 cents, and now we see silver approaching $20. What is going on? That's what we're going to be talking about in today's video. Before we start, make sure to smash that like button, subscribe if you're new, because I post daily videos. If you love precious metals, make sure to smash that like button. Let's see how many people love precious metals. I know I do. So, yesterday, I made a lot of videos talking about silver's potential, what is happening in the short term, the signs, the signals that are showing that silver still has more room to rise. And within a day, we already saw silver blow past that $19 resistance level that it was sitting at for so long, and now it's approaching $20. And now this is a critical time because this is when new money comes in. People start to see, oh, silver really is rallying. Silver really does have potential, and now there's going to be a huge flood of new money coming in, and that's going to push the price even higher. There is going to be a lot of people short selling or selling, taking some profits, but I don't think that's gonna counterweight or weigh out or be as active or as profitable or even as much potential as the new money coming in. So with that said, I do want to give some warnings, because anytime a price jumps up this high this quick, you got to remember that there usually is a dip or a sell-off or a price correction. Now, what is a price correction, Silver Slayer? That's when the price jumps up, to $19.51. But since it happens so fast and to such a large extent, the price usually within the next couple of days goes down a little bit. And that's not to worry. It doesn't mean you need to panic sell. It doesn't mean you need to freak out. It doesn't mean that silver is going to keep going down or even stay that low. See, the price goes up a little bit and then down a little bit, and then up more and then down a little bit. And that's how precious metals, that's how any asset, any investment works. It doesn't just keep going up, up, up. And I'm glad it doesn't, because then it would crash extremely hard, like we've seen $20 or $50 silver in 2011. It crashed so hard because it went up so fast. So anyways, I have a couple of articles I want to share with you guys. The link to these articles will be in the description if you want to check them out yourself. So the first one's from Seeking Alpha, talking about how silver's recovery has been dramatic, but how high can it go? So here's the summary. Despite making some recovery, silver prices have risen some 20% since March. Silver is still estimated to have far to go, according to Goldman Sachs, as quoted by Reuters. The strong gains seen in gold over the recent months and the bounce in the broad commodity complex have supported silver, but it still remains deeply undervalued on the basis. Goldman sees the approaching $2,000 next year end, and if it were to break that level, then to rise further. So he's saying gold breaking that $2,000 resistance, that it's never happened before. Right now we're seeing record high trading gold prices, and we're not really seeing that with silver. So gold's already blown up, but silver still hasn't done that yet. Silver has a far way to go before it sees any type of record breaking high. So early this year, the silver market was going through a tough time. Its reaction to the growing pandemic was in stark contrast of that to gold. The disconnect between the two metals rose to historic proportions as gold rose on the way back of deeply negative real interest rates and expectations, justified or otherwise, of rising inflation as a result of massive fiscal stimulus. Gold prices surged and silver prices fell as the industrial prospects for the cheaper sibling collapsed around the world. Despite making some recovery, silver prices have risen some 20% since March. Silver is still estimated to have as far again to go, according to Goldman Sachs, as quoted by Reuters. Over the past 20 years, silver prices have closely tracked an equally weighted basket of the continuous commodity index and gold prices. Seeking Alpha observes, by virtue of having a foot in both camps as well as industrial and monetary metal, the strong gains seen in gold over the recent months and the bounce in the broad commodity complex have supported silver, but it still remains deeply undervalued on this basis. So they're saying, there is, silver is rising a little bit, but to nowhere near of an extent as gold, and I still think that silver is still undervalued, even approaching $20. So silver's case, apart from it underperforming its historic average, is the potential for it to be boosted by, one, the growing Chinese recovery driving demand for industrial consumption, its attractions as a safe haven investment and supply constraints due to COVID mining related disruptions in Central and South America. On arbitrage, doing the rounds these last few months was to sell gold and buy silver, largely on the historic disconnect between the two prices as gold soared and silver collapsed. But with economic activity improving and supply side concerns not going away, silver's continued rise has better prospects. And that's definitely true. The supply side of silver with this pandemic has been extremely frustrating for miners, for big business, for everyone. Everyone's affected by this. We have a rising demand with 5G technology, with electric vehicles, with green energy and photovoltaic cells. So rising demand, but a diminishing supply, and that's only going to make silver rise higher. And I think we're starting to see the first signs of this. Goldman sees gold approaching $2,000 next year, and if it were to break that level, then to rise further. And that's true because if gold breaks that resistance, and if silver breaks that it finally broke that $19 resistance, and that's why it went up so high to $19.50. And if it breaks that $20 resistance, I think it's gonna go up to $21, $22 extremely fast as well, as people are talking about it, as there's much attention on it, as people are seeing the proof in the pudding that silver has some room to rise. So long positions in the gold market, however, are already substantial, and the bank sees upward momentum slowing as the global economy recovers slowly and risk aversion eases. So I'm curious what you thought about this. I definitely think, it's a great article to just explain. So now we have another article from Daily FX talking about price or silver price eyes fresh 2020 highs on US dollar weakness. So again, talking about how fiat money, weakening or burning or slowly collapsing is only going to benefit precious metals. So 2020 may prove to be a breakout year for silver prices as an unprecedented amount of fiscal and monetary stimulus fuels the metal surge to fresh yearly highs. The injection of liquidity into financial markets over the last 6 months has been extreme, with a measure of the money supply, M1 money stock, surging above $5 trillion off the back of an extraordinary response from the Federal Reserve. So the central bank's balance sheet has dramatically expanded since the start of the year, ballooning above $7.1 trillion in June, underpinning the recovery in equity markets from the March lows and coinciding with the dramatic weakening of the US dollar. Through unlimited large-scale asset purchase, the introduction of multiple emergency lending facilities, and a record reduction in the target range for funding rate, the Federal Reserve has shown its commitment to using its full range of tools to support the U.S. economy in this challenging time, which means what? Flood the economy with money, without it, regardless of the consequence. So with that said, this support looks to set continue in light of the 3 U.S. states reporting their highest daily increases in this pandemic deaths, or these virus deaths, as the FOMC activity monitors the implications of incoming information for the economic outlook, including information related to public health, and remains ready to use its tools to act as appropriate to support the economy. To that end, the provision of further monetary stimulus in response to weakening fundamentals may suppress the US dollar and provide a platform for liquidity-driven silver prices to climb to freshly year highs, and I definitely think it will. Anytime you look at rising silver prices, it always has to do with some of this stuff on the brink end of a recession/depression. So the US dollar index's recent decline may continue to stoke the outbreak or the breakout in silver prices after collapsing through the December low of 96.36 in the 16-week trend report. A daily close below the monthly low may validate the downside breakout of ascending triangle consolidation, implying a potential retest of the March low. The development of the RSI reinforces the bearish outlook seen in price action and may intensify selling pressure as it drives toward oversold territory, suggesting increasing downside momentum. A convincing close between the 50% Fibonacci and the June low is needed to confirm a potential continuation of the downtrend from the yearly high, with oversold conditions on the RSI probably coinciding with a push to test the psychologically pivotal 95 level. So silver prices seem poised to move higher as the RSI surges into overbought conditions, driving the metal through the 2013 downtrend and psychologically imposing the $19 level to fresh year highs. And we've actually seen silver push through that since this was written. A push to the implied measure move above $19.65, calculated from the topside breakout of the symmetrical triangle consolidation, may be in the offering as the slope of a 50-day moving average continues to steepen and the RSI surges above 70. A period of consolidation above the February high of $18.94 is needed to validate the breakout above the 2013 and to signal a true change in the market sentiment. And I think we've already got there. Resistance at the $20 mark may prove to be a step too far for the silver metal, with a short-term correction back to the $19 level probably eventuating before buyers attempt to drive prices to the highest level in 4 years. And that's definitely true. That's what I was talking about in the beginning of the video, talking about the correction happening. Before it hits $20, or if it does break through $20, I feel like there's going to be a correction happening quickly, probably around the low $19 level again, maybe even 18, the high 18s, but I don't see that. I would probably see it around low 19s, especially if it does start to go higher before it gets lower. But it doesn't mean the silver is going to stay that low. That just means it's a small correction, and then once it drops lower, people buy up silver because it's the one last time they get it for cheap, and that pushes the price right back up to where it was before. So you have nothing to worry about. Just make sure to take it day at a time, and make sure you're not distracted, and you're not investing biasly from the emotional attachment involved. You want to look at things realistically. That's how you invest. So anyways, the link to these two articles will be in the description. If you thought this video was educational, informational, or at least is entertaining, make sure to smash that like button. Make sure you subscribe. I post daily videos. That's it for this one. Thank you so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.